The government officially shut down and the market officially made a new record high. It's almost poetic how that works. It's a classic reminder though to trade the charts in front of you and not what you think should happen. But today's rally wasn't just brought to us by semiconductors like previous rallies, no, the healthcare sector has finally risen from the dead. And this is where we've got to spend some time diving into the nuance of how sector rotation will either help or hurt markets moving forward. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. Get this, I've got 11 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale. And the first thing that we can see here is that obviously the market made that brand new record high, which of course is a new higher high in the trend count, and therefore the trend remains in the upward direction. If we're considering the candle structure from today's session, obviously it's a solid green-bodied bar that closes very strongly in the upper third of the day's range. So there's no indication of a pullback looking imminent. However, because this is the highest high and a brand new all-time high in the trend count, even if a pullback were to occur, there's plenty of room here for a daily higher low to preserve the trend in the upward direction. You can clearly see that this is the last major daily higher low off of the daily 20 SMA, right off of the FOMC low, which was a soft higher low. This is now a firm higher low because the hourly trend did flip to down here. If the hourly trend flips to down again, I would certainly be on the lookout for a daily higher low to be firm at 660.40 or above. You could certainly build the argument that over time the daily 20 SMA will play catch up with that level and it will provide confluence once again. The other reason why I'm particularly compelled about 660.40 is because it represents the bottom end of this 5-day balance that the market had broken down from and then quickly recaptured. So ideally, the market does not move back down underneath that level. Otherwise, we start having the situation of plenty of overhead supply, which would likely yield some kind of lower high underneath. And now all of a sudden, we have the threat for a daily trend reversal. So this path that I've just drawn in here, if it makes an equal low after a lower high underneath 660.40, we'll be concerned, but I want to pause for a second and just go back to the idea that if we look at the daily candle structure at face value here, it's a solid green-bodied bar. We trended from the opening print, basically straight up to the high of day, with very minimal pullback. So are there any imminent signs of a pullback looking like it's right around the corner? Oh my God, I can't believe it, the market's going to crash and burn. The answer to me is absolutely not. It would seem very reasonable that the market could either produce high and tight consolidation and then continuation. It could get a shallow pullback, and we'll take a look at the hourly level here in just a second, then Brigade bolt back over the all-time high level, or it could even get that full hourly downtrend here and still offer a daily higher low to preserve the trend in the upward direction. So I'm not really seeing a major threat on the daily timescale. When and if price does find acceptance underneath 660.40, I will change my tone, but that's just not the situation we're dealing with as of right now. The final thing I want to point out is just that the volume was fairly light on today's session. So if this is just day one of a breakout through these prior highs back here, we could easily be looking at continuation into new record highs if volume comes in to support this move as we produce, continuation really on an intraday breakout pattern tomorrow, perhaps. That's one situation. We could get day two follow through, right? The last thing I'll say outside of volume and structure is just bringing out the Fibonacci extension actually on the daily. Now, this is not a forecast target like we have to go there tomorrow or Friday or the next day. The 100% extension is a pie in the sky target, but it's a reference point as we're moving into blue sky territories. That's up here at 686.65. The Fib 61.8 extension is a little bit more reasonable and currently situated around 674.25. I could see that being reasonable into the end of this week if we see momentum follow through in the upward direction. So if you're looking for a blue sky target and you're not monitoring intraday, which I would encourage you to do so, that's the best way to figure out whether or not sellers are going to start stepping up at an arbitrary location in new highs. But the 61.8 is at 674.25. Okay, that is your Fib extension to the upside. Let's take a look at the hourly chart here. And of course, we're going to be in an hourly uptrend, no doubt about that, via the breakout to a new higher high today. So we have lows, higher lows, very choppy market Tuesday morning. I actually found it very compelling here that on Wednesday's open, today's open, we actually unwound this move overnight, right? The market opened back inside of this chop and slop zone. So you have to put yourself in the shoes of a seller, right? Let's just talk about this in terms of strength of who's in control, who's participating in this market. After a big breakout like this into the close of Tuesday, probably feeling pretty bullish, right? As of normal hours market close. Overnight, when we undercut the previous day's low and then open inside the previous day's range, especially this choppy range from Tuesday, that's probably fairly discouraging for longs. So the fact that sellers could not take advantage of an open back inside of this range after what was apparently a failed breakout overnight, the fact that sellers could not yield a Brigade Bolt lower high underneath the bottom of this range speaks volumes about who's actually participating in this market. And I'll give you just the clearest hint of all, it's certainly not stronger new money sellers. We have new money buyers getting active. We have passive buyers seemingly getting active, so momentum buyers, and then also just passive investors, right? And we don't really have any indications of sellers stepping up and hammering this market home. So on the hourly chart, because this is the highest high of the trend count, just like the daily, we could certainly afford some kind of pullback. If the market decides to consolidate over the previous highs back here, that looks pretty darn good for hourly high and tight consolidation, call it an hourly bull flag, and then continuation over today's high seeks upside continuation to that first fib 61.8 extension up into 674.25, right? So that's one situation for upside. If we pull back deeper than that, that's okay. This is not the end of the world. Something that looks like this, you could try a scalp from point A to point B as a short. It wouldn't be my favored outcome here for sure, but you could try that. It'd be a failure back down underneath the previous all-time high. That's 667.25. But then I would promptly change my tone and say, is it possible to set a daily, not daily, but rather hourly higher low here, right? Relative to this low, that's still certainly a higher low, pulling back from the highest high in the trend count. That's where I would look for buyers to step up. That's primarily over Monday's high, over Wednesday's high, an opening print of last week, as well as this prior high and this high into the Friday session of what is now 2 weeks ago. So that level at 664.75 is the ideal place for that 1 hour higher low, right? Where this chart starts to become a little bit more concerning from the hourly perspective is if we don't hold that. If we do see a full retracement back down into this range, into this chop and slop, it raises the question, okay, I thought we had new money buyers. I thought we had momentum in the upward direction. Why is that all of a sudden failing if we're back inside of this range, not yielding an hourly higher low outside of that Monday high, once again, 664.75. So I'll change my tone on the hourly chart on that breakdown of this level. And then again, let's think about how this trend progresses. If the hourly trend flips to down, we know that that's actually what serves the daily chart well, right? Something like this gives you an equal low coming into here. Any lower highs, right, that then make a low here is now in service to your daily higher low. Right, the hourly trend flips to down, high. This is a very minor lower high. I wouldn't expect that into the end of the week to be prominent, but this would be a lower high happening here. This is an equal low, and you're not holding the higher low here, so this is an equal low to what we have back here, Monday and Tuesday, and a lower low underneath gets you to the daily higher low zone at 660.40. So it's totally reasonable that the hourly trend could flip to down here, and we would still be bullish on the daily time scale, looking for that higher low. There's plenty of short opportunity if the hourly trend were to flip to down, but let's just go back to base case thinking. What is the primary outcome here, noting the strength of the session today, and based on some of the evidence that we'll walk through momentarily? I would say buyers are in control. This is a primary idea and a primary outcome for upside. This, although yes, there maybe is a quick scalp, A to B like we just talked about, this is still an hourly higher low. Here, I'd be bullish on that, and I'd be bullish here on the reclaim of 667.25. You could also then Brigade Bolt over today's high if you were to just do something like that. Not improper to have the new all-time high level mapped at 669. You can certainly throw that level on your chart. So all set from that perspective. We know what the pathing looks like. We know how and if the daily hourly trend, is going to reverse to the downside. We know how that works and how it's in service to the daily higher low. If we bring out a Fibonacci from the low of last Thursday to the new high, notice that the Fib 38.2 is actually spot on with the consolidation highs. Now, I'd be concerned if we were to take out Monday's high. I'm not really going to give it that wiggle room to the 38.2, but it is kind of an interesting nuance there. What else do you see? The Fib 61.8 is perfect confluence with the daily line in the sand at 660.40, which makes sense to me, especially noting that it's not a random, low that we're pulling from on the hourly chart. It is the daily higher low, the last daily higher low in the trend count. Therefore, the Fib 61.8 seems valid here at that key reference point, which aligns with previous candle structure. So that's making sense to me. We could throw the fib on from today's low up to today's high just to get a sense for what this looks like. And lo and behold, notice Fib 38.2 at the previous high here, 667.25 being reinforced roughly. And then the Fib 61.8 is almost spot on the money with Monday's high, reinforcing that 664.75 level as well. I'd give it a little bit more breathing room than the true 61.8. So really liking the confluence out of these fib pulls. If we come in here with an intraday anchored VWAP, you can see that the cluster just nested beautifully, a little cradle here for that higher low consolidation on Monday and Tuesday. Remember, the pink dot is the FOMC anchored VWAP here. This is the all-time high, of course. This is the gap up from Monday, and this goes way back to the previous daily high or low here. So all things considered, this looks pretty compelling for high and tight consolidation remaining over the entirety of the stack. If we get this pullback here, right, that looks pretty good off of this anchored VWAP from Monday's gap up, then I would start to be concerned as we start to drop underneath these things. Once again, this, although the daily 20 will be there, it probably serves as a little bit of a, okay, we need that firm hourly trend reversal to reclaim this VWAP cluster, and that's where we have our daily high or low. When the hourly trend flips from what is potentially going to be down, right, let's just say it's down like this, when and if it flips back to up and can reclaim this cluster of VWAPs, that's where I would be bullish and say that, okay, the daily high or low is officially in. So that's how I'm sort of navigating this chart moving forward. Hopefully that's helpful. Hopefully that's been a thorough investigation. Let's take a look at the market internals. If you're not familiar with this dashboard, check out the video tutorial in the top right-hand corner. What do we see here? I think this is a beautiful blend of market internals, right? The reason I say that is because they're not over-correlated. If we had up here over 2,000 on a huge trend day like this, yeah, it means everything's up. There's strength market-wide. The breadth is extremely broad. But it also means it's over-correlated. And over-correlation leads to volatility. And volatility doesn't necessarily lead to a sustained rally. This, although I would have preferred to see it stronger, don't get me wrong, and a 1,000 print would have been much, much better, but it's not over-correlated, is my main point. So it's not like the classic analogy is rocking a boat. When everybody moves to one side of the canoe, it starts to tip, and then you rush to the other side, and then you get all this volatility, right? So you're not getting that. It's actually a fairly balanced session at the exchange level. You can see volume inflows. Again, not as strong as what I would have liked to seen. I would say much stronger new money buyers would be active on something like 300 million plus. We didn't quite get there. You can see the cumulative build on the tick is a nice 45-degree line ramping into the close. Really not spending too much time or distance really underneath the zero line today. It's not about how high you go. It's about how low you don't go. No slams into the negative 800, negative 1,000. So at the exchange level, it's actually looking pretty balanced and bullish for this rally in the upward direction. I really like what I'm seeing here from that internals perspective. It's not, like I said, over-correlated leads to volatility, and we're not seeing that. So it should be a more sustained market movement. Yes, there can be some sort of consolidation. Yes, there can be some sort of pullback, but it shouldn't be overly volatile where we're straight up, straight down, straight up, straight down, right? And getting crazy like that. The internals would not be indicative of this type of movement being right around the corner. Now, if I'm proven wrong, then that's the benefit of hindsight, of course. But given what we have in hand right now, that's currently the read in the market. Let's take a look at the market profile. Let's actually go full screen here. There we go. So the ES market profile, if you're not familiar with this type of chart, check out the video tutorial in the top right-hand corner. You can see that value certainly shifts higher relative to the Tuesday session. Again, I thought that this was going to be a fairly concerning open on today's session, noting that we had spike highs rejecting from Tuesday, opening back down over here. Pure rejection of the spike, opening back inside of value, testing lower overnight. Very, very impressed with the buying from today's session. If I'm being honest, I had extremely low expectations of today's session coming into the bell. I was thinking, oh goodness, here we go. Another choppy day in the ES, just like we had yesterday, right? So to see the market trend like this and actually produce a quadruple distribution, you ready? We have 1, we have 2, we have 3, and we have 4 down to the low of day. Quadruple distribution separated by J, H, D, single prints, right? Very impressed with the trending session today. You can clearly see point of control was higher, price acceptance higher, poor high up here at the all-time high. So that's in theory in need of repair. I would look for that to break on a subsequent test. And a very simple litmus test for the end of this week is where's the market finding acceptance? Is it finding acceptance in the upper distribution, the second upper distribution, the middle distribution, or the lower distribution? If we're in the first two, bulls on parade. If we're in the middle, still bullish generally because the uptrend is persistent across the board still, but not as bullish. And in the lower third, or the lower quadrant, excuse me, there's 4 here, definitely a little bit more bearish, starting to feel a little bit more like a failed breakout if we're accepting underneath I'll give you the level here. That's going to be around 67.35 on the ES is the sort of start of your lower distribution in here. All right, so that is the general look at the market profile. Again, everything is supportive of buyers being in control. It's not a sort of short squeeze P-shaped profile. Last thing I'll comment on is if it were a P-shaped profile, if this was all up here and we just had A period single prints through the post, that's a concern, right? That's just short squeeze. That's not necessarily new money buyers getting involved, but we don't have that. It's a long, thin, drawn out profile. So I really like what I'm seeing here in the ES. Again, it doesn't mean that the market's invincible to a pullback. There's no indication of one being imminent, but if something like this were to emerge, I wouldn't throw my hands up in the air and say, oh my God, like what's going on? No, it's reasonable, right? That is well within the confines of continuation of the hourly trend. Things still look bullish. With that, let's jump on into the Qs. Let's take a look at the NASDAQ quickly on the daily chart. Not as meaningful of a breakout today through the all-time high. You did close above, but again, not really an excess high here, so to speak. You have lows, you have sort of balanced lows. This would be a soft higher low example. The hourly trend has not flipped to down ever since this movement in here. So you have a soft higher low at this, it's kind of a triple bottom-esque level at 596.75. If you could stay above that, if you can produce this consolidation here, I really want to see the excess high come in. And when and if that happens, right, the higher the high is, the more wiggle room we have ultimately for a higher low pullback should something occur. At this point, because this is a very equal-ish high in here, I would just be neutral on the pullback, and if we do crack that low at 596.75, you're probably going to induce an hourly downtrend at that point, and then you're really leaning into the idea of one of these hourly levels, not the major daily pivot, but the hourly levels stepping up for a firm daily higher low when and if we can get confluence with that daily 20 SMA. So not quite as clean of a picture here on the QQQ relative to the higher low opportunity. However, it's still bullish nonetheless. There's nothing about this chart that is inherently bearish, and oh my God, let's run for the hills and just like duck and cover. Let's take a look at the Fibonacci extension here on the daily chart, just like we did in the S&P to get a reference point. Fib 61.8 if we were to get that excess high around 615. And if we go beyond that, we're looking at 631.50. Again, this is a pipe dream call for the end of the week. Certainly not a top priority. I'm not going to be structuring trades based on that, but just giving some references given sort of the uptrend that we're in. Let's take a look at the hourly chart. We already have our fibs applied, so I think this is great. You can see the cluster providing that cradle once again at 596.75. I'd be slightly concerned there. Again, the concept is the same as the S&P. You'd really just be producing an equal low at that point on the hourly time scale. The threat would be that the hourly trend flips to down, and then you're trying to find that daily higher low, which we know is not as clean, right? So in the picture perfect situation, you probably deal with a QQQ chart here that has a pullback that stays over this anchored VWAP, over the consolidation highs from Tuesday mid-morning, over the opening print from Monday, and that's 599.50. If the QQQ can pull back and support that, maintain an hourly higher low, and then Brigade bolt back into blue sky territories, that's where I'm looking for my excess high. And when and if we get the excess high, that's fantastic. That's the all-time high. It's a higher high in the trend count. Then we have much more breathing room for the hourly trend to flip to down, and then we can seek that daily higher low at a much more appropriate spot. I mean, it would be great to set some sort of major higher high up here on the daily, and then be able to pull back and say that this is the higher low. But as of right now, you're not really going to get an hourly downtrend before that, so this will remain a soft higher low, right? So you can kind of see the push and pull, the nuance between that level there. So at the end of the day, it's the end of the day, but at the end of the day, where the chart changes on the Qs, obviously, is just via some sort of lower high here, right? Underneath 596.75 is where I would change my tone to bearish. I would not change my tone to bearish anywhere inside of this range. I would not really, you could say like, oh, look above and fail, and it's going to be a short. I really don't like the prospect of shorting into that chop and slop. If you were watching the market on Tuesday, you know just how brutal that up, down, sideways, sideways, up, down, new high, new low, high, back to the highs, back to the low. You know how brutal that was. It's for a trend trader, that's gray hairs galore. So I'm going to avoid that with everything I've got. And the better short is, as we said, just something that looks like this. That's where the sellers really come in and can step it up there. Let's come from the low up to the high. We've got your 38.2 kind of arbitrarily near this VWAP stack. That's okay, I suppose. It's not really anything critical. If we come from today's low to today's high, Fib 61.8 is decent confluence with those Tuesday highs from the range, at least at 599.50. So a little bit of reinforcement there. Nothing crazy about the Fib 38.2. It is kind of the afternoon pullback here, but I wouldn't read into that all that much. Let's jump into the NASDAQ side of the market internals. You could see here better volume inflows today. A little bit weaker in terms of the open on the advanced decline line, but we did recover nonetheless. If we take a look at the cumulative build on the tick, it's much more lackluster, and this is what I meant in the intro by sector rotation. You can kind of see at the snapshot level from the dashboard here that although the NASDAQ maybe beat out the S&P on the actual volume flows, the advanced decline line wasn't as strong, the cumulative build on the tick wasn't as strong. That's because healthcare had a huge helping hand for the S&P as an index overall today. Now, there's a little bit of healthcare involved in the NASDAQ, but not as much, obviously. So let's continue along into our market profile for the NQ and just see what other nuances we have here. I'm going to start zoomed out like this just so we can sort of reference this as still being a lack of material excess at the all-time high. It's really not how the auction should end. An all-time high shouldn't look like this. You should have a big string of single prints that blasts right through a prior reference point where the market goes out on an auction bang, so to speak, where everybody's like, think about a car auction, right? The last two people bidding back to back, head to head there, just going crazy, bidding up price, and then boom, it finally ends when someone throws in the towel. That's what you need to see at the highs, and that's not at all what this is indicative of here. KLM straight across the top, poor high. You also have that quadruple distribution, quadruple distribution here in the NQ, and I'd take the same approach as the ES. Where's the market spending more time tomorrow? In the upper two distributions, upper two distributions would be here, or in the lower two distributions, right? If we're in the upper two, bulls on parade, high and tight consolidation, perfect, higher low, boom, looking for follow through, right? Poor high should get some repair. If the market starts to accept underneath this, right, that's much more of that failed breakout situation. And okay, now all of a sudden, all right, in this range, we can prepare for the short, but I would only activate an action on that idea should we break down underneath something like 596.75 in the QQQ. All right, that is your NQ analysis. That is your NASDAQ side of the market. Let's go to small caps quickly and see what's going on over here. So an okay day in small caps. Obviously, this is not quite at the all-time high yet. You can see we're still underneath, not underneath, but rather just a hair inside of this previous balance range. That was a 5-day balance, 5 days. And we finally closed 2 bars back above after getting this gap down below, holding the daily 20. So I still think the daily trend is generally up. It's not as clean as the NASDAQ or the S&P. You've got a little bit, you could start to call this a broadening formation where you're diverging a little bit. However, the general trend is up via a series of higher lows and higher highs. It's now just a matter of, does the market stay above this level here in smalls at 241.65? And with the labor report situation being kicked down the road a little bit, I don't exactly have an answer here, but the ADP non-farm this morning, bad news, right? And what do we know about the situation in the market right now? Bad news is actually good for the market because it's going to improve the odds, at least when it comes to labor. It's going to improve the odds of a rate cut coming in not just October, but into the end of the year and probably as we continue into 2026, right? And that's really what the market's looking forward to here. So take that twisted stance where bad news is good news for equity prices, but probably not good overall if we're starting to have that conversation around the recession theme. We're not there yet, right? And I still think that there's nuance between, mega cap tech going to be able to support the market for forever, but small caps, certainly. That recession narrative could become a thing if jobless claims, if the labor situation gets too far out of control. Anyways, back to the technicals in front of us on the chart. Key level, keep it simple, 241.65. If we take a look at the hourly time scale, notice how there's much more confusion in this zone. Rather than being above the VWAP cluster, pulling back, supporting above, it's not as clean. So at this point, now it has to prove that it's going to develop as being clean, right? Which is very straightforward. We just have to stay over that key daily level we just mentioned at 241.65. Either we stay above the entirety of the stack, and great, buyers are starting to establish some next hourly high or low set, and then this is really where things perk back up, back towards the all-time high. That would be bullish for the S&P 500. It would also speak to the broadening nature of the market rally should that take place. If small caps, on the other hand, fail this level back into the chop and slop, I would not be aggressively biased inside of this box here between 241.65 and 238.50, and instead, I would only take a bear stance when and if we lose this last major daily high or low at 238.50, as we just mentioned. That would also put price underneath the daily 20 SMA. It'd be the first of the 3 indices to actually break that in a more meaningful way. Okay, that is your small caps analysis here. There's really not much fib analysis to do. We could come in from the high to the low this time around. You could just see how if we hold over the fib 38.2, it will invalidate the opportunity for a bear flag the more time we spend above. Ideally, you're over the fib 61.8, which actually aligns with, if you just extend to the left a little bit, this is your FOMC high from back over here. So I know this is looking like madness on the chart, but a lot of colors, a lot of lines. This level in here at 243.25, if we're above that, I would start to be a little bit more compelled for upside towards the all-time high. All right, that is your IWM analysis there. Let's go over to the Russell internals. Quickly take a peek at these. You can see decent volume inflows. We didn't quite close positive on the advanced decline line, and the index, not index score rather, but the cumulative tick is a little bit more so like the NQ, the NASDAQ side of the market, rather than the S&P. So kind of that mixed bag. I think that this is not really a shocker considering what's going on with price action itself. Finally just starting to clear this after chopping around inside of it for a little while. I think if you're just going to draw a conclusion here, it would just be that stronger sellers are not present. Otherwise, this weak open should have yielded further downside. This weak open on the tick should have spent all day under the zero mark if stronger sellers were here, and that just didn't happen. So some small takeaways would just be, we don't have stronger sellers getting active, right? And that's across all three of the major big indices that we watch. We can even just finish up the small caps here on the Russell futures. And you can also see, right, as we zoom in, although very lackluster, the value area did still move higher. Point of control did still move higher. If we had stronger sellers, that really wouldn't be the situation we're dealing with. You can also see we have an M period spike on the RTY, so we'll watch that very closely. For tomorrow, we either open above the spike, bullish, in the spike, still bullish, looking for a Brigade bolt out of range. Under the spike, not so bullish, I'd be back to neutral on small caps. Let's get on back to the platform here, and let's take a look through our sectors for a quick sector watch. Who was leading, who was losing, and where was the weight as the market made a brand new all-time high. Let's see what we've got. Healthcare sector leads the pack this week, up 5.74%. It's like a total, second wind here for healthcare. Semiconductors up a nice 2.78%, followed by the tech sector 1.49%. If you look at the bottom of the barrel, it's the energy sector down 2.2, communications down 1.78, and then financials down 1.2. This is not the end of the world when it comes to sector posture. I think because healthcare has been a laggard for so long, it's okay to see this outperforming and pushing markets towards the high, and it speaks to that rotation thesis that we were mentioning in the intro, which we'll dive into here as we go through. So keep this stuff in mind. The market is sitting at an all-time high, and it can afford a pullback. So as we go through the sectors, think about, what does this sector do? Is it going to help or hurt the pullback, right? So in the XLV, this is a pretty much straight shot move out of the balance range. If this is a balance, that's a balance range double, that's your home. Mission accomplished, range double. The next range double would be this one. And that probably brings you closer to the midpoint of this from back over here. Let me just zoom out a little bit. You can see this is actually a major cliff. It's the neckline of a Head and Shoulders, right? So would it be reasonable that healthcare could slow down here and offer a pullback? In my view, survey says that's within the realm of possibilities. Doesn't mean it's guaranteed, but if healthcare pulls back, that's strike one for the S&P 500. We're at resistance on an extended breakout. Let's carry that forward. Let's go to semiconductors. Okay, we're extended into a blue sky breakout. Again, there's nothing here that guarantees a pullback. This is not an inverted hammer. This is not large upper wick. It's none of that. But if the market were to pull back on semiconductors, is it going to break the trend? And therefore, what does it do for the S&P? Well, if healthcare, one of the major leaders this week, pulls back, and semiconductors, major leader this week, pull back, and again, mind you, these things will still remain in uptrends, what does it mean for the S&P? It probably means the S&P also pulls back. Now, where we're going to run into a problem here is if we take a look at the XLF, and I will skip, we'll get back to the XLK and all the others, but I will skip to the XLF because it's the major threat. You can see I already have an alert here. Notice that the XLF has not accepted outside of its range here, and this is the second heaviest weight sector by market cap. It's also more risk on in nature. If we start to see healthcare pullback, semiconductors pullback, tech pullback, and the XLF breaks down underneath 5290, I would start to say, let's be very careful about just blindly buying a pullback in the S&P 500 if we're losing one of the top two heavyweight sectors to a daily downtrend. That's one of the things that I think you need to pay attention to. Now, on the contrary, if let's start with financials, if financials break down underneath this level, healthcare has like a 15-minute pullback and then snaps right back to the high, makes a new high. If semiconductors hold up over the previous all-time high and snap right back to today's high, is this going to be the end of the world? No. So the situation that becomes dangerous is when and if financials break down, along with deeper pullbacks on that semiconductor sector, on that healthcare sector, which have really been primary drivers to the upside this week. All right, what is a catalyst to be thinking about here on the XLF? Of course, earnings, financial earnings, big banks are the first to kick off earnings season always. That's going to start around October 14th with JP Morgan. Okay, so that is the sector watch in terms of those two. We can go to the XLK. You can see how we certainly have a higher high here. The trend is up. Higher low pullbacks are well within reason. If this fails and we get a lower high here, I would still opt for a daily higher low at this zone, right? Daily 20 SMA, 276.60. I don't see a big threat to a daily trend reversal here yet, but once again, thinking about how the puzzle pieces fit together, understand that if this is taking place with an XLF breakdown, you might just think twice about just blindly buying the S&P on a pullback this time around. Let's go utilities, leading to a new high. That, of course, is a D for defensive sector, but upward pressure is upward pressure. You're still getting outperformance from tech as well as semis as a subsector. And then you also have healthcare as well outperforming. Let's go real estate. No comment here, still inside the range. Let's go staples. No comment inside of this lower range. We'll talk about the health of the consumer, retail, so to speak, when and if the labor situation deteriorates further. ADP, it's not really looking good, but of course BLS is going to get pushed off for now. XLY, on the other hand, discretionary, still looks fine. Consolidation, Brigade, Bolt for upside, that could put a dampening on the S&P pullback should we get that bearish situation we just outlined with the configuration of healthcare, semiconductors, and financials. So watch XLY. This chart actually looks really good. Hasn't broken out to a new high yet. This is a great higher low. I love the hold of the daily 20 in here. We know Tesla's on the move today. Let's see if this can push it up and out. It's really all about, can we get Amazon and Prime Day numbers to start looking good up and over this 240, 250. Let's continue along to industrials. No comment here, still inside the range. It's not helping or hurting. If we look at the TLT, bonds kind of sideways in this mediocre range now. We're still seeing a floor at the 4% mark on the 10-year. If you look at energy, failed breakout here. I think this is good for inflation technically. We just don't want to avoid. We want to avoid. It's not we don't want to avoid. We do want to avoid a breakdown Brigade Bolt here, as for that would imply global demand for oil drying up. You could use crude as a better proxy for that. CL is much closer actually to that breakdown point. If we just go over here, look at that cliff. If this breaks down, we'll have the conversation when appropriate. It would be good for inflation, but it would represent a little bit of a slowdown more globally. Let's take a look at comms. Comms is a little bit rougher. You could thank Meta for this. You could thank Netflix for this a little bit. Excuse me. However, this equal low is under fire. We have not broken out to a new high. I would consider this weekly consolidation, and the line in the sand has to be this 115.65 coming from this multiple day high breakout point. You had this thin structure rally, and we haven't retraced all of it. So this is still the place where I'd be looking for a higher low. Again, weekly, higher low there, but certainly a little bit of a headwind for the market here with communications breaking down. We covered financials in pretty great detail already. 52.90 is that key spot to watch. And again, we haven't broken down through that yet. I want to be abundantly clear here. I'm not trying to forecast or intimidate or insinuate that, oh my God, it's going to get nasty in the S&P. I'm just saying these are the pieces of the puzzle that you need to be watching to figure out whether or not, if we get a pullback in the S&P, you should buy it or you should wait patiently until trends start to change back in the XLF, back in the SMH, back in the XLK, right? Let's take a look at the XLB. Not much to really comment on over here. You could sort of move the goalpost and say this is the range. You could say this is the range. Just being the lightest weight sector, it's not worth, the juice isn't worth the squeeze to overly scrutinize XLB. Let's jump into the risk ratios here and just get a sense for whether or not the sector ratios are bullish or bearish, risk on, risk off. If you're not familiar with ratio grids and how to set them up on Thinkorswim, check out the video tutorial in the top right-hand corner. What do we see here? XLK looks phenomenal. This is the glue that's holding the market together again. It was doing that back over here, if you recall. It's doing it again. Financials, we know, is a little bit of a red flag. That's a threat. That's not looking good. Communications hasn't broken down completely, but I'll go neutral on that one. XLY looks okay. Still over an upward sloping 50 SMA here in gold. XLV, a little bit of a red flag, but remember, it's playing the catch-up trade right now. I would say we're okay there for now. I'd be more concerned if the XLU starts to break out more meaningfully and the XLP curls up and over its daily 50. We just don't have that yet, so I would still lean slightly risk on here out of this ratio grid. Let's go to the AB sets. This is still batting 6 for 6. This looks phenomenal here on these specialized ratios. Risk on, risk appetite is elevated. Looks pretty darn good. Let's go to the B set. Let's take a look over here. Gold continues to be performing quite well up near its all-time highs. 4,000 seems to be calling on the gold contract. The TLT, the bond ratio is still not screaming, flight to safety. And the Bitcoin chart here, the Sailor Shift tool, actually it must have just done it on the after hours open here for the futures. It just started to trigger the buy signal on the weekly. So interesting stuff. Bitcoin recatching a bid. That, of course, is bullish, and that is risk on. Let's take a look at the dollar and interest rates. Dollar, of course, drifting slightly lower on the prospect of rates slightly lower on the prospect of weaker than expected labor data, so no issues there. I would still say that this 4% mark is the floor as long as the Fed funds projections remain at 3% for the end-all be-all rate. And again, the inverted ZT will give us a quick idea. This is rolling over. Maybe it actually did change a little bit. Let's go on over to the Fed tracker tool. Let's not play the guessing game. Let's just go take a peek. Let me give this a refresh. Let's go to the probabilities table. And there we go. Okay, so, the market's saying we'll price in a little bit more, not much, but one more meeting's worth of cut there. However, 99.4% odds in the bag, rate cut in the next meeting based on the ADP. That was an update from, low 90s earlier this morning and 89 yesterday. If you look at the next one, we're still dealing with 89% odds of a cut for 2 into the end of the year there. So really the Fed is, or the market's telling the Fed basically you should be cutting here and easing a little bit further. And I think that as of right now, the labor data might suggest that that is a fine idea. The next thing that we should really pay attention to is if we go over to the calendar, if we go to manufacturing prices, notice that they actually came down. So one of the issues recently in inflation, right, if you've been watching, is on CPI, it's less about services inflation reigniting quite yet. We'll see if that ends up being the case if rates come down too fast to re-spark housing inflation shelter. However, manufacturing prices, if we're thinking about goods inflation was the major threat from tariffs. And now that this number is actually this is under forecast, this is under prior, if you just go across here, that's a pretty good sign that perhaps, right, the one-time increase in the price level is going to be, as Jerome Powell says, this is just so classic, I'll quote him every time, short-lived. It's short-lived. So ISM manufacturing prices look really good here at 10 a.m., coming in lighter than the expectations. You could also see there's your horrible ADP non-farm, and the prior got revised down as well. I believe it was from a positive 50-something thousand, right? Yeah, 54,000 to -3 on the revision. It just makes you wonder, oh my God, what is this going to get revised to? Right? Is that going to get revised to like -120? I mean, certainly don't hope that, of course. We don't want to see a labor-driven recession, but my God, those are some pretty horrendous numbers out of ADP. So remember, bad news is good news for the market because it guarantees basically that the Fed will have to cut rates and the market's going to sort of get hell-bent on, oh my God, here comes lower rates, here comes easier policy, and stocks will rally, right? So you can choose to be cynical about that, or you could just trade the charts in front of you, which is the whole point of the saying in the intro about the government shutdown, which, speaking of, here are some stats again. I know we flashed it up in the intro, but here it is. I mean, the average gain during a government shutdown is quite literally 0% unchanged. Percent positive outcome, 50%. You may as well flip a coin, heads or tails. So trying to trade this based on, oh my God, the government shut down, it's going to be the end of the world and it's different this time, forget about it. You've just seen the evidence today. It's not different this time. It doesn't matter what you think. The charts are in uptrends. There's risk on sentiment. There's sort of this idea of rate cuts in the pipeline. And if you trade against that, obviously it's not been working. So do with that information what you will. Let's move along to the earnings calendar. There's nothing really here. It's just Nike after the close from Tuesday. That's all set. It's just in a range. There's nothing to really pay attention to. It's really once we start to get into financial earnings that we start caring again. So let's go back to the platform. Let's finish this video on a strong note. Let's take a look at some additional indications. The bond ratio, the one we care about up here, is if this flips into an uptrend, then fine, the market's concerned about rate cuts. It is not, as this remains sort of underneath a downward sloping 50 and rolling over underneath. That would be helpful for the rate cut thesis. If we take a look at credit spreads, downtrend still, no issues on those. If we take a look at junk bonds, this is where there's a subtle divergence. So what I want you to pay attention to, this is the LQD. We're going to swap for the SPX in just a second, but look at the lower highs. We know, just based on the analysis we've conducted already, that obviously the market, both NASDAQ and S&P, made new highs, right? So you are getting a bearish divergence here on junk, which would just be a subtle indication of risk appetite not being fully there, which is, if you think back to the ratio chart on just the sectors, not the specialized six-pack, then it technically was kind of towing the line of not fully risk on, right? The XLK was the saving grace. So is this suggesting that a pullback might be appropriate? It wouldn't be unreasonable. Am I going to go all in and short the market because of this single bearish data point? Probably not. Let's go ahead and take a look at the breadth chart. You can see breadth looks pretty darn good here. New highs versus lows accelerating. The 200 SMA uptick, 50 SMA subtle downtick here. If we take a look at the RSP though, nothing overly concerning in the RSP. As a matter of fact, threatening a break through the high here, which would be bullish for market breadth. If we look at the QQQE, which is the equal weight NASDAQ, this actually did make a new higher high. So all things considered, breadth certainly looks more expansive rather than contractive. Not a word. It's expanding rather than contracting, right? And the premise behind this is that healthcare is finally catching up, right? And you could think whatever you want about the announcement on Tuesday, but generally now that all these agreements are coming into play, it's guaranteed revenue for a lot of these companies. Your Pfizers of the world, your Merricks of the world, Eli Lilly was just off to the races. So forget about the insurance companies. It's about the drug manufacturers, right? So that is what we've got on that watch. Let's get into our volatility. I'm just going to tell you straight up front, it looks very normal for the market conditions. You have volatility pulling in on the VIX, VVIX pulling in here, no reason to spend too much time on this stuff, and the vol futures are in a deep contango, still same thing here, and the one-day VIX is in its comfort zone between about 1275 and 745. Let's rip through the core list of companies. There's a lot of sleepy old guards of tech in here that we don't really care about, which is why I have 11 new trade ideas for you. Let's start with the one, the only, It's got to be NVIDIA. Look at this beautiful, beautiful chart holding that level right up against the prior all-time high. The breakout point, this 183.75, awesome hold intraday. I would say this was not really much of a day two follow through though. If you take a look at volume, it's pretty light. Most of the range is overlapping. We did not close over the prior bar's high. So could we get some phase of consolidation and then an additional breakout? Certainly seems probable, or like possible in the realm of probabilities. Let's take a look at the hourly chart. Notice this 15-minute or even hourly bull flag into the close. I would just play based on this tomorrow. If we're in the bull flag range, keep an open mind for continuation, and what you want to see is volume come in to support that as we're moving into new highs. If you start to drop underneath 186.55, I would just be neutral and sort of take the daily approach and say, where's the daily flag that looks like this? And then over time, right, it's less about buying this level again and more about just understanding that if we support here, it's in service to eventually getting a breakout through the high. Right. Let's continue along to Microsoft, old guard of tech. Here's one of them for sure. If we look at the daily chart to begin with, this is a horrible range recently. It just finally started to crack through the high. Very incremental higher highs in here, notice, right? So a very difficult trade. Like if you're a trader who looks for momentum, an exit of a previous day's range or something, it's been horrible. Horrible trade on Microsoft. So keep it simple. Just watch 518.50. That's all I'll really say about it. It's a big level. If you're above, bullish. If you're below, I wouldn't touch this with a 90-foot pole. Let's take a look at Apple. Big failed breakout today on Apple. It actually ate up a bunch of mental bandwidth watching the first opening drive. Thankfully we were nimble and, we're able to execute on Tesla Palantir, but generally not the greatest looking daily chart. You have this big failure to break out and continue over 257. I'd be neutral through this range. The only time I would get short is if the broad market's breaking down and we could target this gap close. Thin structure through here. Take a look on the hourly chart. Let's do something that looks like this. There's your failure on the opening drive, lower high acceptance underneath into the afternoon, neutral through the flag range. If we crack the lows, that's your gap close here. Thin structure underneath 251.35. Daily 20 SMA may meet us there for support, so please reevaluate when and if we get there. Next up, Amazon, another one of these names that's just been a little tough. There's a couple of breakdowns in here that were worth trading, but for now, it's balancing off on the lows. I would keep it simple and just say you've got daily bear flag. Obviously, you've closed back towards the highs of the range. If you Stevie Wonder out of 222, you're looking at this high at 224.25. Then beyond that, it's the moving average cluster. If you're just in the range, I would let it be through here. I would maintain the bearish stance on bear flag consolidation, noting this as well. Previous support still acting loosely as resistance if you're below. The part that gets tough to say is like, do you really want to be short into a daily 200 SMA? It certainly does not strike me as being the best and most opportune trade idea. So, sure, we could call it bear flag, but equally you could probably call it hourly double bottom, right? You could see this here. Here's your hourly double bottom. There's your neckline. The number is 222. Again, for that Stevie Wonder through the thin structure here, and then also into 227.60. So keeping it simple on some of these charts, some of the old tech charts here, if you will. It's just crazy to say, but it's just how it feels recently. Google, interesting rally to recover the daily 20 into the end of day. 244.40 is your number to beat. If you could stay above that, I would maintain a slightly more bullish stance here on Google, looking for thin structure retracement through this breakdown over here. So 244.40, if we can get this, looking good. That rotation is the aim. If we drop below, I would just let it be for bear flag consolidation. Just as we said before, I don't like the prospect of being short in this range here. This prior balance is choppy. I would wait patiently for this breakdown to get short, right? This thin structure where there's less congestion. That's 238. So really patient if you're trying to short Google. It's not really a top priority there. Let's jump into Meta, another one of these old guards of tech, which is just, these names really haven't been as opportunistic as, the new kids on the block, so to speak. Palantir, Tesla's, classic, but we'll get into some of these additional trade ideas. But for now, Meta is just, maybe it's a gap fill reversal off of this pre-earnings high before the gap up, right? You finally have a daily hammer down here, but you're buying into a downtrend. You're catching the falling knife. I mean, if you wanted to dollar cost average into some shares or something, that's not really the point of this analysis, but I would certainly need to see a couple of things here, right? Over the hammer high is first and foremost the easiest. You also have the double top neckline, right? If you're to count this as double top, you easily have to recapture that. That's 722. If you take a look in the hourly time scale, do I want to be long into this? No. Primary trend is down on the hourly and the daily. If anything, this is like a lower high threat. So it needs a better structural low to be built out. I think that this could be the first signs of something starting to happen. You have an increase in volume on the gap down. You have the gap fill reversal from the prior earnings cycle. You finally filled and repaired that structure. So we could build something out down here, but I'm just not convinced that one bar is enough to really make that bold claim. So I'm interested in possibly longs, but it's just got to set something clean up. As of right now, it's not clean. Let's take a look at Tesla, a beauty today. Up and over some key levels. You've got your daily breakout of that 444.50. Great little, opening pullback and then rally to get back over it. Continuation into the close. Really strong stuff here on Tesla. You can see the grind into the afternoon as well. It leaves us with some pretty simple watches for tomorrow. There's a couple of key reference points. You can have your Monday high and the pullback low from here at 452.25 as being major. If you get some sort of like acceptance above that, I would remain bullish, seeking upside. If you drop that, let the pullback complete, let it go to here and seek the hourly high or low. Hourly higher low would be the better idea at 444.50. We had a nice intraday higher low on like a 2-minute chart, basically 5-minute as well, up against it on the open. However, you could afford the hourly now. So because we've broken out, if it's going to come in for the Brigade Bolt, that's where you're looking for it. It's at 444.50 if it comes in. There's nothing saying it has to come in, but if it drops 452.25, that's what I would look for. Consolidation here keeps me again bullish. Next upside target 466.25. Beyond that, we have the hourly all-time high level at 480.25, the true all-time high 488.54. Remember, delivery numbers come out tomorrow morning, so please make sure to come on out to the pre-market prep 8 o'clock Eastern time here every day on the channel. We'll give you a game plan with the most up-to-date analysis considering what happens with deliveries scheduled for tomorrow. Let's go to JP Morgan earnings around the corner here. It's been a lackluster trade recently, unless you're, very, very good at scalping it. So I would just let it be in this box. I wouldn't be bearish here. It still seems like a bull flag to me on the higher time scales. If you Brigade Bolt the blue sky territories, go with. If you start breaking down, would be hard pressed to be short into this because it's a weekly breakout level. So 301.25, daily 50. I mean, you're in a daily downtrend at that point if you're getting there, but definitely a weekly higher low available. So few and far between in terms of new ideas on JPM. Let's go to Palantir. Another great opportunity today, finally breaking out of the top of this flag range here. If you take a look at what we're dealing with, the all-time high is the target, and it's a poor high, mechanical high up there. If you jump into the hourly, beautiful consolidation into the afternoon. Very straightforward chart, very similar to NVIDIA in some sense on a fractal level. If you get consolidation here, stay bullish and look for the Brigade Bolt out of previous day's high. That's over 185.35, targets the all-time high. If you drop into the range, I would say maybe look above and fail. I don't know that I would be aggressively bearish on this if it's just in the range, unless the broad market was breaking down aggressively. So asterisk, if this is going to go look above and fail, if this is going to look like a little double top in hindsight, broad market needs to be falling off of a cliff, pulling back hard on the hourly chart if I'm going to short Palantir underneath 183.75 under the premise of look above and fail, right? Trapped buyers overhead, something that looks like this. Maybe the context has to be, it's got to be something like straight out of a textbook if I'm going to take that short and participate. I would prefer to go long on Palantir for continuation out of the range. Broadcom, very interested in watching to see if this produces a reversal. You've got a very gentle and mild pullback from this all-time high stuff after the earnings gap up from some of these deals, right? If this can go for a reversal on the hourly trend back to up via inverted head and shoulders, 339.60. I've got the alert set. I'm waiting patiently for it. If this yields a higher low and goes, I want to be involved in this. So Broadcom, interested in this chart. Love the holds over 331.30 and breakouts over 339.60 with respect to the daily 20 should likely yield some kind of reversal. And maybe this will act as a weekly higher low. Can't really call it a daily higher low because of this gap structure from over here. A daily higher low would have stayed above this 331.30, not overshot. Let's take a look at AMD. AMD finally getting interesting here towards the top end of its range with respect to the daily 50 SMA. If you take a look at the hourly chart here, notice how we just closed above into the afternoon, and there also, I believe, is going to be a catalyst for tomorrow with Intel. Intel, I believe, was it Intel INTC? There's a catalyst with someone here on AMD. Let's just open this news flow up. Yeah, Intel shares trading higher on Wednesday. Intel reported talks to AMD as customer. There you go. So AMD, Intel, possible names with catalyst for tomorrow. Worth paying attention to. I think AMD is a decent watch because of how long it's been in range. If it breaks range, looking for that upside, right? 163.65, 169.50 would be the upside level. Let's continue along to Robinhood, and let's take a peek over here. Just an absolute monster this week, coming out of, not necessarily nowhere, but you would have had to have been following Vlad over on Robinhood. X for the announcement of, I think it was the number of contracts, event contracts that was posted. Anyways, lots of transactions over at Robinhood, bringing shorting to the platform, doing all sorts of things. As a company, as an investment, absolutely thrilled with it. As a trade, a little tough to catch. I'm not going to lie. It's been a little tough to catch in here. If you caught it, then congrats to you. Again, I always wish nothing but the best for everybody. If you caught the trade in Robinhood, I am envious of you, and I hope that it was a very lucrative opportunity. I found it a little bit slippery, very hard to actually capture upside gain on, and just simply for the reason that it came from nowhere. It seemingly came from nowhere on that Monday session. So going forward, what do we do about it? Well, we've got a little bit of a head and shoulders here. If we break through the neckline, thin structure short maybe. Again, the conditions like Palantir would have to be textbook for me to get involved short here. However, I think the best opportunity, and it might be a pipe dream, is the pullback for the Brigade Bolt up against 130, right? Do we get something here to position for longs? Again, probably a pipe dream, but very interested in that location if Robinhood decides to pull back. If we just get consolidation up here, call it for what it is. It's a bull flag on the hourly over 143.70 with a new catalyst. Could get it going for another leg. But again, probably needs a new catalyst considering how much volume has already transacted up here as we start to slow down. Those are the initial core list of companies. I do have 11 additional charts for you. Let's get into it. AXP, if we could get the ordering of the letters right. All right, let's start on the daily time scale. What do we know is around the corner here? It's earnings. What do we also know about the XLF? The XLF looks fairly weak right now. So this chart also looks weak in isolation. The reason I say that is because you can see here, we have a bearish 3-bar play underneath previous resistance, right? So in a picture-perfect world, buyers want Brigade Bolt above resistance. You want to use this as newfound support. We're not getting that. Underneath this, opening print. Underneath this, close and low of prior day's session, 328.60. Probably talking about a rotation to the daily 50. Probably talking about these prior lows. If the XLF is breaking down, this makes sense here in AXP. Let's go APP. Speaking of tickers with A's, app has been on a tear, recently, and it's finally starting to slow down. So you could see a failure to move higher here on this morning session, and now we have a cliff. If we're underneath 701.75, is it possible to retrace some of this thin structure for the gap underneath? I think so. Now again, here's something to keep in mind when it comes to all these different trading opportunities and trying to manage your focus and what you should pay attention to. What is the theme of the market right now? S&P, NASDAQ. Brand new all-time highs. Market's trending higher. Risk appetite seems to be there. Do you want to over-index on short opportunities in a raging bull market? Probably not, even if it's just for a trade, right? You probably want to go with the best opportunities in the direction of the market so the wind is at your back. So although we could trade both ways, the market context right now is not overly favorable for shorts. But app, anyways, there's a little cliff point here at 701.75. Next up, CEG. Constellation, CEG. What an absolute monster weekly chart. Take a look at this weekly. Look at this thing. Monster chart here. Huge all-time high breakout. Low, higher low. Nice engulfment of the upper wick of the previous inverted hammer. We'll go back down to a daily. Really great and strong looking daily bar here. We do have a news catalyst on CEG having to do with their reactors. So if this is going to move up and over 360, rock and roll, blue sky territories. Let's see if this can get some follow through up and over that level. 357, 360 zone into new highs. Very interested on CEG. IBM. Let's go on over to Watson here and see what this has for us. Nice little bull flag here after closing the gap and some, right? So nice consolidation. Outside bar, bullish engulfing bar over this high should probably target these highs. Now, what do we notice about these highs? Very, very flat. So if we can go through, if we can test them, we're probably going through them. So over 288.25 targets 295.15. And the way I would, are we on the wrong time scales here? Let's change this to an hourly chart. There we go. On the hourly chart, right, the way I would want to get involved is Brigade Bolt here. Trim, half, 3/4, whatever it is, depending on how you want to manage your position. Then hold some runners to see if we can move beyond that. Right, that's IBM. Next up, we have Palo Alto. PANW is the ticker on this one. And very similar to Constellation, a monster weekly chart. Take a look at this weekly. Huge breakout level inside weekly bar after a red sort of indecisive doji over something like 208.48. Who let that slide? My goodness. Someone call HR. Over 208.50. Let's rock and roll. Let's rock and roll. You really need to see the volume come into this one. There's not as much catalyst going on right now in cyber. So we'll see. Maybe there's some sort of AI headline that can be written. Again, we're not trying to force the square peg into the round hole, but if we have something here, if there's something to do on Palo Alto, very interesting chart over 208.50 on a big weekly breakout. All right, that's PANW. Rigetti, where are you? RGTI. So this looks more like a short. You have inside bearish 3-bar play, right? This is 2 inside candles now back-to-back, Tuesday and today's Wednesday session. You can see the alert there, under 28.75. Let's see if it can come on down into some of this thin structure below. I don't know if the whole quantum theme is completely over, but if you look at IONQ, which is not an explicit trade idea for today's episode, but you can already see the pullback happening over here. Interesting. Did the theme sort of top out on this big bang? Maybe, but Rigetti at least looks very clean because of how equal all those lows are. So the only difficulty here, I did it again. We're on dual dailies. Let's go back to an hourly. The only thing that becomes difficult here is the actual execution of it. There's some decent open interest in Rigetti's put side. Let's give this a little reset to open interest. There it is, the 49,000 block at 29. So you might be able to do it with options. It is hard to borrow. You're going to have to pay for locates on different platforms. So just keep that in mind. It's not like the smoothest trade. And once again, think about the theme of the market right now. Is shorting this really the greatest idea? Is it the top focus? Do with that what you will. Let's get on over to something that is a little bit hotter. Let's go Coinbase here. I love this range and the fact that we've broken out of it now, finally. It's taken a long time. This was a failure back here. But now, let's see if it wants to prove it, right? Just like back here, it's got to prove it. It's got to do a couple things. It's got to hold 337.25, and then it also has to Brigade bolt over 351.90. If it doesn't do both of those things, it is not a trade. If it's just chopping around in here, it's not a trade. If it goes gap fill reversal, you could try early entry, long here, target this high, right, for risk reward. That's fine. But this is not a breakout trade to close the gap until it does both things. The other thing it could do is just one of the two, which is this, right? And that would just be straight up Brigade bolt over 351.90. So interesting there on Coinbase. Gap close is up at 376.65. Let's move along to TSM. Getting into some of the semiconductors, some of the new hot names. They're not new per se, but they're definitely coming onto the scene in a more substantial way nowadays. Huge breakout on TSM, new all-time highs, big volume coming in here. Do we get a day 2 follow-through? That's the question. You're watching 290 and pullbacks ideally hold up over this little sweet spot right here at 284.50. Right, if we can get consolidation that looks like this, rock and roll Brigade bolts upside. Semiconductors are on a tear. TSM is one of many. Let's continue along. MU is up next. This one came out of nowhere as well today. Just an absolute monster into blue sky territories. Pipe dream, yes, but if it does pull back like this, have to be interested at 169.70 because of the amount of volume, because of the sheer size of the move today. This is probably worth having on a watch list for tomorrow. Let's move into MRVL, which still looks good. This was an idea from the weekend video as well. We had a bullish 3-bar play here. Didn't quite get all the way triggered on that Monday session. There was no intraday opportunity there. However, you could still see that it is a watch. If we break out of the flag, there's some room to run up here into about 91.85. One thing to think about is, again, going back to that question of focus, do we want to focus on Marvel's bull flag, or do we want to focus on NVIDIA new all-time highs? Do we want to focus on TSM new all-time highs? Do we want to focus on Marvel the laggard, or some of those more explosive movers? So maybe Marvel has its day. Maybe we do have a catch-up market, but I think the emphasis should be on the leaders first. Let's finalize this list with INTC, which, as we know, also has that AMD headline. And you could see here, I mean, just pretty solid look, right? Right through this equal high after a beautiful higher low with volume, with momentum, with everything that's been announced on this stock recently. I mean, you're talking about 41.50. There's pretty big upside here, and what I would need to see on it is, number one, catalyst, right, continuing to follow through, and then just acceptance over 36.10. If we can get both of those things and volume to come in to support the move, I'd be pretty interested in Intel, even if it's just a shares trade, throwing on some shares and letting it go. I mean, the options on this, let's see. I guess they trade much better than I would have expected, and it's probably due to the catalyst and the renewed interest in this name, but I'm probably... I mean, there's plenty of open interest in volume. Who am I to say? I was going to say, you know what, I'm not interested, but the spread is tight enough. There's enough liquidity. I'm into it. I'm into it on the Intel options chain here. If we can get some sort of move up and over 36.10, I'll be watching for that tomorrow. So semiconductors are the hot theme of the market right now. Gave you a couple of additional ideas outside of the semiconductor theme to consider. But once again, understand the theme of the market right now. Understand the tone of the market, the momentum of the market. and just try to select a few of those opportunities that, number one, work for you psychologically. You understand things that you're trading, you understand the charts, the chart setups are clean to you. And then number two, try to align it such that, right, the market focus is helping you, not hurting you. If the market's ripping, I don't want to just be blindly short Rigetti because, oh, I thought this level was going to break. If the market's pulling back and dumping, maybe Rigetti is actually in focus, right? Anyhow, that's all I've got for you in today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. We covered a lot today, and it is a late one, so I appreciate you sticking with me. As always, we will be live tomorrow morning at 8 o'clock Eastern Time for another episode and installation of the pre-market prep. We'll continue to navigate this government shutdown together and figure out when and if the BLS is going to report numbers on Friday, next week, the week after that. We'll see what happens with all this. So check out the links listed down below if you want to trade live with myself and other great traders in the live squawk. That is down there as well. With that said, have a green trading week. And as always, I will see you in the next one.